Their particular computer was about the size of a desk. It included 300 vacuum tubes and 1 mile of wire that replaced relay switches to solve complicated algebraic problems. In other words, it was doing arithmetic and algebra. Compare that to what you are currently holding in your phone or slipped into your pocket this morning. And whether it was government funded or private capital, all of this would have been impossible without these two facts of reality. Matter is energy, and energy is matter, and the speed of light is the conversion factor. In the man-made world, money is production, production is money, and the speed of price information is the conversion factor. Hello, everyone, and welcome back to the Moneyball Method Podcast. This is Mark Shupe, the author of the Moneyball Method, a Middle-Class Manifesto for Objective Investing, and I'd like to continue where I left off last week, and that's by stepping back in time and discussing some of the inventions and discoveries and how they have affected our lives in profound ways, and the relationship of those discoveries and inventions to private equity financing or government financing, as the case may be. In other words, a trip down memory lane for venture capital and capitalism. And today I'm going to discuss the decades of the 1940s, 1950s, and 1960s. That is 30 years, obviously, and certainly this brief discussion will only touch on some of the highlights from 30,000 feet, if you will, and I'd like to start with the year 1942 and the invention of the electric digital computer. And credit, belatedly, must be given to physics professor John Atanasoff and his graduate student Clifford Berry from Iowa State University. They were the first inventors of an electrical digital computer, and it was completed with $5,000 of venture capital funding from the nonprofit Research Corporation of New York City. Their particular computer was about the size of a desk. It included 300 vacuum tubes and 1 mile of wire that replaced relay switches to solve complicated algebraic problems. In other words, it was doing arithmetic and algebra. Compare that to what you are currently holding in your phone or slipped into your pocket this morning. The storage medium for this computer was a pair of drums that rotated once per second and that could run 30 additions or subtractions with each revolution, meaning 30 calculations per minute, one every 2 seconds, as opposed to, say, 300 million per second, which is commonplace today. And even that might be a small number. The computer was named ABC after Atanasoff, Berry, and Computer, and was acknowledged as the predecessors to the more famous ENIAC, ENIAC computer that was developed in 1946 after World War II. Speaking of 1946, this was also the birth of atomic energy. In particular, the atomic bomb, which goes back to the Manhattan Project. According to Brookings Institution, the expenditures through August 1945 for the atomic bomb, including costs from 1940 to 1942 for the National Defense Research Council and the Office of Scientific Research and Development, was $20 billion. $20 billion to develop the A-bomb that ended the war in the Pacific Theater. That is massive, especially in terms of what was spent on other armaments in World War II. More than anything except perhaps tanks. Nuclear fission, however, was discovered in 1938 by chemist Otto Hahn and Franz Strassmann of the Kaiser Wilhelm Institute in Berlin. And fission was actually an analogy for biological cell division. It was the possibility of nuclear chain reactions that were revolutionary, and for the generation of electrical power, not to mention the unimaginable severity of kinetic weapons. The race for the bomb, however, was not limited to the United States and the democratic socialists in Germany. Soviet Premier Stalin had his top physicists working feverishly to discover the secret to chain reactions. And with that, I would like to turn to a piece of fiction, a very important novel. The central character of the greatest novel written about the Battle of Stalingrad in 1942 Russia was an atomic physicist. The novel's title is Life and Fate. The author is Vasily Grossman. His novel was the 20th century version of Leo Tolstoy's War and Peace. And here is what the author of Grossman had to say about his nuclear physicist character, Grossman. The theory had been elaborated by physicists of international fame. Its mathematics were flawless. The success of this experiment was the theory's most brilliant triumph. To Victor, it seemed as exalted and poetic as the experiment on relativity. That was a quote from Life and Fate. In the novel, physicist Victor was also pressured to denounce Albert Einstein and bourgeois physics in general. It did not conform to Soviet realism, Soviet materialism. But Victor stood his ground until he didn't. You see, Victor was Jewish, and so was Einstein. Getting back to the Manhattan Project at Los Alamos, among other places in the United States, the Jewish scientists that were working directly on the Manhattan Project were Leo Szilard, Robert Oppenheimer, Edward Teller, Hans Bethe, Richard Feynman, Niels Bohr, Joseph Rotblat. Free minds tend to do extraordinary things. Now I'd like to turn to another development, in this time in the world of finance. 1946 also saw the creation of the American Research and Development Corporation. Ostensibly a venture capital firm, ARD was incorporated in Massachusetts by members of the New England Council. Its president, Georges Doriot, an immigrant from France, envisioned a new approach to entrepreneurial finance. This is engineering. This is invention in abstract form, using intangibles such as money and wealth. And to quote an article from the Harvard Business School, ARD does not invest in the ordinary sense. Rather, it creates wealth by taking calculated risks in selected companies in whose growth it believes. Creating a vision, taking calculated risk, learning from experience. Does that sound familiar? That is also the Moneyball Method. But there is a great deal of difference between VC investing and the Moneyball Method, which we will get to. 43% of ARD's capital was from individuals, 36% from investment companies, 8% from insurance companies, 7% from brokerage firms, and 6% from higher education. In other words, mostly private capital. Other private equity firms, including J.H. Whitney and Company and the Rockefeller Brothers Company, were all family funded. ARD was attracting a diversified portfolio of investors. In 1954, however, ARD's shares fell from $16 a share from a high of $29, while its net asset value remained at $28. This amounted to a steep discount for a closed-ended fund. Now that is interesting. What is a closed-ended fund? We know about mutual funds, we know about exchange-traded funds, but what is a closed-ended fund? They've been around for a long time, for decades. ARD was a closed-ended fund. The typical mutual fund is an open-ended fund. One of the big differences between open-ended and closed-ended is that it is possible for a closed-ended fund to trade at a discount, meaning a lower price per share on the New York Stock Exchange than its net asset value. $16 versus $28, that's a steep discount, maybe about 40%. Why would it trade at a 40% discount to the net asset value price? What was the net asset value price? How do you calculate that? If you're an investor in mutual funds, it's important to know. If you buy an open-ended mutual fund, one of the great advantages is the fund company guarantees that you can sell your shares back to them at the net asset value price. No such guarantee exists with regard to closed-ended funds. And I believe in this case, and I don't know this to be a fact, but the net asset value was probably the book value of the companies that the ARD had bought, yet the market was discounting them from that price. Apparently, they felt the future potential cash flow and profitability wasn't as great as originally thought. Regardless, I digress. However, in 1957, U.S. Navy veteran and MIT engineer Kenneth Olson co-founded Digital Equipment Corporation, along with his colleague Harlan Anderson, to develop circuit board modules and then later fast and efficient computers. ARD's investment revitalized the company, its investment in digital, I should say, and helped the development of the VC industry, venture capital, in the United States. At the time, Digital's PDP-1 machine cost $120,000. But compared to IBM's mainframes, which cost $1 million or more, that was cheap. And users could observe graphical displays and receive results rather than waiting for processing in the batch queue environment. Digital equipment had revolutionized hardware. Now I'm going to quote a little bit more from the Harvard Business School article. The digital equipment investment showed that one could systematically build a portfolio of long-tailed investments. The return of the few that hit the long tail would offset the losses and mediocre gains of the others. What is the long tail? Well, if you look at a bell curve, a log normal probability distribution, the tails are the extremes at either end of that bell curve. A long tail would be one that extends disproportionately to the right. In other words, a large deviation event, a hugely profitable win for the investors of the venture capital firm. The rare exception, that 10% that makes up for all of the losses of the 90% of the venture capital investments that lose money or fail completely, as we discussed last week. And what are the tails of the distribution curve to a Moneyball investor? They are also large deviation events. They are extreme market conditions that we do not predict or control, but what differentiates the Moneyball method from every other system that I'm aware of is that we anticipate the possibility of large deviation events to the upside and the downside, and we develop a contingency plan based on your risk capacity and spending capacity. But again, I digress. The next quote from the Harvard Business School article is that ARD supplied both capital and governance. That is, it was not only selective about the initial investments it chose to make, but it also actively participated in the management of those investments. This is what differentiates venture capital from the Moneyball method. We do not participate in the management of the companies that we own. However, it did revolutionize private investing. It became the model for all future venture capital firms. And the last quote from the Harvard Business School article, by creating opportunities for wealth accumulation, ARD probably created an entrepreneurial demand-side spur to venture capital. In other words, for the first time in the history of the world, there were investors that wanted in on the opportunities of these long-tail investments that were pioneered by ARD and their investment in digital equipment. And the success of digital, there was no investor demand for VC opportunities and no capital available for small startups. Why? Maybe because government spending had crowded it out. Let's move forward to 1950. And the creation of commercial jet engines. with General Electric's GE 90-115 producing 115,000 pounds of thrust, rotary-style turbines reached levels of power that were impossible with reciprocating piston engines. Prior to that, in Great Britain, Royal Air Force officer Frank Whittle invented the gas turbine engine that would power the first British jet, the Gloucester E-28/39, which made its first flight on May 15, 1941. And gas turbine engines, to their credit, were also being developed in Germany. However, the 1950s and 1960s became the golden age of commercial air travel, with about half of all Americans having flown by 1970. Moving further into the 1950s, 1957 saw the launch of the first man-made satellite. It was created by Soviet scientists. Sputnik 1 was the first man-made satellite put into space. It was created by Soviet Union scientists, and it launched the race for the moon. But more relevant to everyone on planet Earth is the communication by satellites in geosynchronous orbit that we take for granted today, nearly all of which is funded by private pools of capital. And regarding entertainment, 1965 saw the launch of the 8-track tape and 8-track tape deck. The development of the 8-track tape was Bill Lear of Learjet Corporation, in a conglomerate with Ampex Data Systems, Ford Motor Company, General Motors, Motorola, and RCA Victor, private capital. This was a big deal to the American public. If you were driving your car, now you didn't have to listen to the radio if you wanted to listen to music. You could play your favorite artists without commercials. I remember this. I bought an 8-track tape and installed it under the dash in my car when I was a teenager. And I remember the very first 8-track tape I bought, Sly and the Family Stone, for you baby boomers out there, but I digress again. Eventually, however, the 8-track tape became obsolete and was replaced by the cassette tape deck and the CD player when digital came around. Of course, all of those are obsolete now, but the commercials are back if you don't have a subscription to Spotify or one of the other services, of which I am a subscriber. But 1967 saw the introduction of the handheld calculator. Jack Kilby at Texas Instruments developed the first calculator that was small enough to fit in your hand and perform basic math. Certainly a lot more convenient than a huge desk with 300 vacuum tubes and a mile of wire. It had 18 keys on the front and a large screen on the top that displayed up to 12 decimal points. In 1972, Hewlett-Packard released the HP-35 scientific calculator. And in 1974, I received my first handheld calculator as a gift from my parents from graduating from high school. At the time, it seemed relatively expensive, but it was cheap. And with Robert Noyce of Fairchild Semiconductor, Kilby also helped develop the integrated circuit, which Noyce later improved to the silicon chip. You may have heard of those. And I want to conclude these set of historical achievements with 1968 and the mother of all demos. On December 9th, at the Fall Joint Computer Conference hosted by the Institute of Electrical and Electronics Engineers, Douglas Engelbart took the stage. He was presenting developments on behalf of Stanford Research Institute, and his 90-minute live demonstration featured the introduction of a complete computer hardware and software system called the Online System. Engelbart demonstrated for the first time the fundamental elements of modern personal computing. It gets better. This included Windows, hypertext, graphics, navigation and command input, video conferencing. It also included a computer mouse, word processing, and a real-time editor. Obviously, the mother of all demos influenced the operating systems of Apple's Macintosh, the Atari ST, Commodore's Amiga, and the Microsoft Windows graphical user interface in the 1980s and 1990s. As we can see, the creative minds of this 30-year period gave us amazing new tools for mass market use that had been unimaginable. Digital computing, atomic power, intercontinental travel, and space exploration. And whether it was government funded or private capital, all of this would have been impossible without these two facts of reality. Matter is energy, and energy is matter, and the speed of light is the conversion factor. In the man-made world, money is production, production is money, and the speed of price information is the conversion factor. Thank you for joining me today. That concludes my conversation about the 1930s, 40s, and 50s, and I will continue next week with the first 30 years of the 20th century. Thank you and have a wonderful day.